Welcome back. You're watching a special broadcast on the briefing from the Reserve Bank. Just moments ago, the Reserve Bank Governor, Lesetja Kganyago, telling us that the repo rate remaining unchanged at 7%, your prime lending rate at the banks still standing at 10.5%. With me, Tabi Lioka, economist at Argon Asset Management, and from BP Bernstein, Makwe Masilela. Guys, thanks for coming in. Tabi, I want to start with you. I mean, I picked up the word uncertainty much more in this briefing than we did in the last time. What does that tell us?
I think that their forecasts, especially currency forecasts, were very different now versus the previous MPC meeting. I think that they were surprised by the impact of the President-elect Trump winning the elections versus Hillary, because obviously the outcome would have been different, or they expected the outcome to be different. And the reaction, the market reaction, especially in emerging markets, for a long time it was Mexico, then Brazil, the weakest currency since the announcement of the US elections. We've seen outflows from particularly these markets, emerging markets as a whole, but especially Mexico and South Africa since the announcement of Trump. So I think the weakening of the currency was unexpected, especially to this extent. And the worry then is what will happen when the US starts hiking rates. So we're going into December with this heightened or much weaker currency.
Yeah, just to add to that, Makwe, he went to some detail talking about possible vulnerabilities of this US election of Donald Trump. I mean, he spoke about the protectionism, he spoke about other trade relations, the capital flows. Did you expect before this MPC meeting that he will get into the US election as much as he did?
It was expected, and as Tabi just said, no one expected that Donald will win, and now no one knows what's Donald's policies going forward. We're all looking out, checking how he's shaping up his cabinet. And yes, we know that the guy has been very harsh, but now lately we've seen him softening as well. I mean, the issue of Hillary, that is no longer going to go and prosecute her anymore, So we are guarding against it to see exactly, is the guy going to still be pushing what he was campaigning for, or he will soften up. So I think everyone, not just only us, are watching what's happening with this whole thing. The guy just mentioned that his first day of the job, he's going to withdraw from that trade relation with the Asian markets. And the Japanese minister said, without the US, that trade pact is useless. So yes, we'll continue, and it's not only him. Everyone who's watching the markets is guiding the policies exactly how they're going to shape up.
Tabi, it was interesting to see, though, that the inflation forecast essentially remained the same. I mean, what we're looking at, 6.6 or 6.4% for 2016. However, he says the risks to the upside movement of inflation, that changed a bit on the upside compared to the previous forecast. What does that tell you?
I think it's a bit of the unknown that we're talking about, that forecasting South Africa. So if we look at endogenously or the factors that influence inflation, food inflation is expected to come back within, come down. So inflation is supposed to come back within the target band. Yeah. The only thing that I see with food, and he did mention, is that is meat. So what happened with meat is that, interestingly, this month, November, there was a 17% hike in the culling, slaughtering of cows, and the demand wasn't there. Yep. So what that means that there is obviously a structural adjustment in the demand, and this will lead to farmers then having to stop the culling or slaughtering of cows, and then to the point where there's an equilibrium between supply and demand. But that means that when food inflation comes back down, meat will lag. But apart from that, there isn't actually any, if you look at it from domestically, there isn't actually anything that will compromise inflation. Where the inflation becomes undermined is the currency, and the currency is driven by sentiment. And currently, and this is something that we don't know. It's very difficult to forecast the rand because of the small economy, open economy. It's used as a proxy for emerging markets. So it's very difficult to forecast what will happen to the rand when Trump, President-elect Trump becomes the president, and also, as was earlier stated, what are his policies? I think the uncertainty around his policies are what every emerging market is actually anticipating, especially. I'm worried about, especially because he campaigned on a Make America Great, anti-trade Looking at the continent, I think Africa trade is enormous with the US, and the US trade to Africa is only 2%.
Yep.
So those are the things that we fear as the continent, but also in South African context.
Let's stick with the rand, Makwen. Let's stay within the US here. I mean, there was the Reserve Bank governor alluding that the American economy is essentially getting stronger. There's some sort of confidence there, and we can likely see the dollar going up. Again, it's about outflows to the US, and there's some concerns there.
Definitely, and I think for the fact that the US, we know they've stated it, that they'll only start hiking if they're happy that the economy is growing, if they're happy with their labor markets. And if you see the recent data that has come out of the US, you can see that at least the US economy is getting there. If you check the US Fed minutes released yesterday night, you can safely say the market has baked in 100% that come December, the Fed will hike, But now, as you are saying, the biggest concern, as Tabi said, is the rent, what's going to happen to the rent. Bear in mind that so far oil is just hovering under $50 a barrel, and we're no longer too sure that will the OPEC manage to get a cut or so. That as well will come into play. So our imports, I think 40% thereof is oil. So if oil goes more than $50 a barrel, the rent weakens. That is inflationary in its nature. Hence, maybe we see the governor is kind of uncomfortable when it comes to the inflation expectations.
And on that rand, I mean, the volatility or the uncertainty is reflected in that 5.7 difference but from now compared to the last MPC meeting. So that in itself tells you that that environment in which the rand operates in is still uncertain.
Definitely. And there are many moving parts. So what I think they're between a rock and a hard place in terms of even trying to forecast confidently the inflation, and also trying to forecast the rand. And I think that in their previous assumptions of the rand, they got it wrong, and that's why they had to make a few adjustments now, and also change the tone. Because remember, the last meeting, you even had analysts were even hinting that we could actually move if the economy strengthens somewhat. We could cut rates in order to stimulate the economy further. But what we're seeing now is that inflationary pressures are so extreme that I think that the SARB will keep rates on hold for the remainder of this year, definitely, obviously, and then also in 2017. I don't see them moving in either direction.
Mark, well, let's talk about other factors weighing on the rand here. One that was mentioned is ratings agencies. If it goes the way of slipping into non-investment grade as far as our credit rating is concerned, and he says that could be a vulnerability for the rand.
Definitely, and we know Moody tomorrow, they've got at least us 2 notches above. So the worst that can happen is that we'll still be above chunk, but the one that we have to be in the lookout is the Standard & Poor one, But bear in mind that, I don't think automatically, South African bonds can get off this world government index, bond index, It doesn't just happen like that. You have to be downgraded at least by 2 agencies to get out of that. But worst case scenario, let's say that happens. Yes, we know people, asset managers, they've got a certain mandate that you have to buy certain asset classes that meets the specific requirements, then definitely there will be outflow from that. So yes, that's a negative as well. And don't undermine the domestic developments that can affect the rand. We have seen that in the past month or so, that our own deeds, can affect the rand negatively as well. That has to still be at the back of our minds, that they can still affect the rand going forward.
Tabi, I want to pick up what you said just moments ago about the possible hike, and 2017 you're not seeing any movements. He did, however, tell us that the hiking cycle could be revisited. Now, the last time the Reserve Bank governor spoke, he said that we could possibly be reaching the end of the hiking cycle. He says he might need a reassessment of that. What does that tell you?
It says that I think the committee is thinking about the impact of the weak currency on inflation, and I think that inflationary expectations are obviously a problem. They're still too high, and it is still too. I think that they realize that they spoke a little bit too soon in terms of trying to reverse the hiking cycle, and they may have to. If inflation is high or higher than the expectation, they may have to then hike rates to tame inflation, which is not good for an economy like South Africa, given that we are still underperforming in terms of economic growth. And the forecasts haven't changed since last meeting, and 0.4% is still very low. It's still flirting with recession, and anything can happen next year. I mean, my forecast is 1%. and this is still a very weak growth forecast.
I want to talk about growth in the moment, but Mark, do you expect a hike next year?
It's possible, for the fact that he will review, for the fact that his tone today changed as compared to the previous meeting. You can see the guy is not too comfortable. And by all means, the market has factored in the notion that come December, the US will increase. But what we have not factored in is how quick the guys can start raising next year.
Yeah. I mean, it's a concern, because if we just bring this entire episode back to the consumer, Tabi, like you said, it's the last thing consumers need at the moment. We've seen him mention the fact that disposable income within households is not anywhere close to healthy.
Actually, consumers were anticipating a rate cut, so that could give them a bit of a reprieve, stimulate the economy through consumption, and we're not seeing that. And so we're going to still be at the bottom in terms of economic growth, going sideways and not moving up. We need some sort of reprieve for consumers. If you look at this year alone, electricity hikes, job losses, an unemployment rate of 27% is quite worrying, especially at a time where economic growth is there still isn't. We don't know how we're going to grow the economy and to what extent. So we're in a very tough situation, especially from the consumer side. And if we get to a point where we have to hike rates, it will put the consumers under extreme pressure.
All right, so when we come back, we want to talk about a little bit more about what the consumer sees in this, and global and local growth. We know that 0.4% is the unchanged forecast by the Reserve Bank, but that will be coming up shortly, just after the break. More on the Reserve Bank decision this afternoon.